Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of $68,837. That's made up of the $41,881 in my US stake portfolio and the $26,956 in my Australian Vanguard portfolio. Having a quick look through my holdings, you can see nothing's changed, and I actually haven't invested in the last fortnight, but more on that later. Same with my Vanguard portfolio. Today, the main focus I wanted to go through was actually my Apple holding, as Apple shortly retook the crown as the world's most valuable company after its recent run-up in performance. If anyone's been following this portfolio videos for a long time, you'd know Apple was actually my first ever investment. I invested back in Apple years ago, and I currently hold 18.329 shares, and I'm up nearly 50% after its incredibly strong recent rally. My average share price is around $142, but if you look over the last 5 years, it's up around 340%. I started investing around 2021, around this pretty much similar time when the stock was trading in the 120s, and now it's all the way up to 212, but it hasn't always been this strong journey. In the last year alone, the stock has rebounded now, but is up only 15% and was even down through periods like here. But you would have seen lots of videos of people selling out and exiting their positions, and I did do a video on my thoughts on Apple, and I actually invested a little bit more when it was cheap so I could buy the dip on a company I believed in long term. And going through this article shows exactly what's kind of been happening in its recent run-up. They say, Apple once again has become the world's most valuable company on Wednesday, dethroning Microsoft from the top spot as the iPhone maker pushes ahead in the race to dominate artificial intelligence technology. Its shares jumped nearly 4% to a record $215, giving it a market cap of $3.29 trillion. Microsoft's market cap stood at $3.24 trillion, just falling behind Apple for the first time in 5 months. The stock surge came tech-heavy Nasdaq hit a record high on fresh signs of cooling inflations. Apple shares added more than 7% in the previous session, a day after it unveiled its range of AI-enabled features and software enhancements for its devices, a move that several analysts said would power iPhone sales. At the Apple Annual Developers Conference on Monday, executives, including the Chief Executive Officer Tim Cook, touted how voice assistant Siri would be able to interact with messages, email, and calendar, as well as third-party apps. Some of the specifics about the AI capabilities that are going to be integrated into the upcoming iPhones made it very apparent that there will clearly be demand for a significant upgrade cycle. Tech giants rivals such as Microsoft and Google owners Alphabet in the red-hot field of AI, a reason why the shares underperformed this year compared to its peers. Some of the concerns over its weak share performance, however, eased after Apple beat their expectations for the quarterly results and forecast in May and unveiled a record $110 billion buyback plan. Apple shares have since risen 12% so far in 2024, whilst Microsoft has added 16% and Alphabet nearly 28%. As someone who's been a long-term investor, and I do actually invest in all three of those tech companies, this is a position I've been watching a lot of because this was a position I was up a lot in, and it was my biggest position in terms of equity for an individual stock, and then Microsoft actually shot by it, and Microsoft is now nearly $1,000 more or over $1,000 more worth in my portfolio compared to what Apple is. And I never sold out of any of the either ones, but it's just how it was. When Microsoft was cheap, I was investing a lot into it because I thought it was a really good company. And the same is for Apple. It did seem a little bit overpriced for a little while, and then when I did see that dip in price, I bought in a little bit more, and it's been quite good for me. I'm up around $1,282 in gains. And the reason why I didn't sell it, as I mentioned before, was just because it's almost like a blue chip holding. If I was to leave my stock portfolio for 5-10 years, I don't think anything would happen at Apple. I could come back and they'd still be printing money. Granted, there are worries about the innovation side of things, but I do think they have smart people there. They obviously invest a lot of money into R&D. They should be hopefully able to grow into new spaces and develop new things that people can purchase, or just commoditize products they already have like they do with their subscriptions. The other company I also wanted to highlight today was a company I'm not actually directly invested in, and that is Nvidia. So Nvidia stock actually went through a share split recently. You probably would have seen They went from 10 shares to 1, and what that does is pretty much just makes it easier for people to buy in, because some places people have to buy whole shares, and it's definitely harder when the stock's trading at 1,200 for people to buy in, whereas if it's trading down in the hundreds, it makes it a bit more reasonable if they can't buy partial shares, and it also looks a bit cheaper to investors even though it's worth the exact same amount. This article also goes through it, so it was Nvidia's stock split, just kind of going through whether it is a buy. Keep in mind, when a stock split happens, not much really changes except for the share price that investors see. And as it says here, the shares were up 25,000% over the last 10 years, and it relies on stock splits to keep its equity price manageable for smaller investors who may not have access to fractional shares, as I mentioned. The most recent of these went into effect on June the 7th, which gave investors 10 shares of Nvidia for the one they previously owned, bringing its stock price to around $126 at the time of writing. It's since gone up again, as it seems to always do. The stock split did nothing to change Nvidia's $3 trillion market cap, which represents the value of all its shares combined. However, some market participants are hopeful that the lower share price could make Nvidia's equity more liquid and help it maintain in its explosive bull runs. So what is the Nvidia bull thesis? Again, it's now gone past Amazon and Google in terms of market cap. It's now the third biggest, and it's slowly even been catching Apple and Microsoft. Its generative AI industry can be likened to the California gold rush. Nvidia would be selling the picks and shovels every miner needs to dig for gold. The company's industry-leading graphic process units, the GPUs, are crucial for running and training complex AI algorithms, and this has led to explosive growth in margins. Nvidia's first quarter revenue increased 262% year over year to $26 billion, driven by sales of data center chips, such as the H100s, and net income jumped 628% to $14.88 billion, which sounds crazy to say. Considering the elevated growth rate, Nvidia is still reasonably valued at a forward price to earnings ratio of 47. For comparison, rival chip maker Advanced Micro Devices has the same forward PE despite sales growth of 2% in the first quarter. Obviously, as every industry grows, people are going to want to take a bigger part of that revenue, whether that be another tech giant like Google, Microsoft, Apple, for example. And after enjoying the boom in sales over the previous 12 months, it will be difficult for the company to continue to grow revenue related to extreme high prior year numbers. So if they have a massive year this year, which they have, it will be hard for them to replicate that next year just because of the amount that they have to sell to and the people they have to sell to. Because not everyone can just go buy one of these H100s. It's normally these big companies like Meta who are investing a lot of money into buying these things to run their like Llama 3 on and stuff. While Nvidia's picks and shovels take on the AI industries protects it from competition, on the consumer side of the industry, it wouldn't be shielded from an industry-wide slowdown, which could occur if clients aren't able to generate enough cash flow to justify their spending. As you can see, lots of businesses are spending billions of dollars, and if the shareholders eventually aren't seeing any value for this in terms of dollars, then it might result in a track back in terms of investments, because obviously, using Meta again as an example, when they were investing into the metaverse, they did that for a long time. Investors weren't very happy because it was burning money. And whilst it might seem like interesting and innovating, at the end of the day, it's the money that talks. This is a stock that I looked at a while ago. I actually opened a short position on it when it was $500 a share, and I quickly closed that because I was worried it might shoot up. And it did. It shot up to over $1,000, and I was thank goodness I shot that, and it's just continued to go up. I couldn't justify the share price at $500, and now it's even harder to, if you look in the last 6 months how much it's gone up. But I did miss out on a lot of money if I had invested, so I do kick myself a little bit, but that's life. You live and you learn, and again, this could have gone down a lot, and I would have said, why did I invest in it? So there's two sides to every story, but it will be interesting to keep tracking. I do a lot of short videos on Nvidia, but I don't do a lot of long ones, just because it's not something I'm directly invested in. But I do have exposure to it in my VOO position, which tracks the ETF, the S&P 500, which is my biggest position by far. And then in my Vanguard portfolio, I have a VGS, which is an international ETF, which has exposure to it as well. So I do have technically some exposure to Nvidia, though it's not directly through the shares, it's through my ETFs, which hold portions of them. The next thing I wanted to go through is my plan for the upcoming future. As you can see, I'm getting closer and closer to 70,000. I didn't invest recently because I've been putting money aside for a holiday I'm going on in a week. If I wasn't going on that, I'd probably have hit 70 grand by now, or I would have hit probably 80 grand. But I'll continue to probably invest. When I get back, I'll have a chunk of change there to do one big deposit, and it will definitely probably take my Vanguard portfolio closer to 30,000, which is the goal. And then the goal is to also get my stake portfolio to 30,000 USD. It's just hard because of how strong the USD is against the AUD at the moment. Transferring money across feels like it hurts. But it's good to see this, and I will get another dividend from Vanguard in July, so that will be nice. Hopefully over $250 as I move to the goal of getting over $1,000 in dividends this year from my Vanguard portfolio specifically. Also going through my US portfolio, a lot of stocks have been doing quite good for me. You can see one that's been a bit sad is actually JP Morgan, which has traded down a little bit as of late. But I did actually exit. I sold a bit of this. That's when I bought Google and Apple, so that was quite good for me. I'm still up a lot of money on it. I'm up 50%, so I can't complain. And my other holdings, the likes of Costco, has been very strong recently. In the last year alone, it's up nearly 66%. I think I'm up nearly 70% on it, 72%. So it's been an amazing holding for me. I do wish I had invested more money into it, but one that I'm still kind of kicking myself is McDonald's. I bought this stock here, and you can see it had this nice run up. I was thinking of selling it here for a quick gain. I decided to hold, and it's traded all the way back down to where I bought it. So yeah, a bit of a lesson for me. I'm not really a trader or anything like that. The most success I've had is holding stocks for long periods of time, and doing that kind of taught me the lesson where I shouldn't be trading stocks. I should just be holding for extended periods of time, which has done well for me previously with the likes of Microsoft, VOO, JP Morgan, Costco, Apple. So all my best positions have been stocks that I've held for long periods of time through the ups and downs, and actually been confident to buy in when they were cheap. Having a look at my breakdown on my Excel spreadsheet, you can see a bit better how things are looking at the moment. Nothing's changed. It's just some positions have grown in value, obviously. And this is one of the reasons why I've been so big into investing recently, because even if I was just keeping this money in my savings account, obviously annually I could probably get around 5%, 5.2%, which is nice. But when you see these returns that I'm getting in the market at the moment, again, you obviously go through times where there's uncertainty, and you have years like 2022, I think it was, where my portfolio was down nearly 20%, where if you just keep it in cash, you don't run that same risk. But it's just been good to see the kind of fruits of my labor, like you're investing all this money, and just to see the outcome. And I'm really motivated to get it to $70,000, especially when I get back. I still want to hit over 85,000 before the end of the year, which I think I can, especially if the stocks keep trading up. And I've now paid off pretty much my whole trip that's coming up. I had a trip at the start of the year as well, so it's kind of trying to balance that real life experiences and still putting money away investing, because the goal is still to get 100 grand, because everyone always says it gets easier after 100 grand. And even after, I'd say like 40 grand, it's been a lot easier for me because of how much bigger your portfolio is. Things just seem to grow by themselves. Like some days you'll have days where the stocks are up, your position's up nearly $1,000 because it's just had such a strong day, like Apple did recently. And doing this kind of shows me how everything's been trading. And again, even if I don't put any extra money in this month, because stocks have been up, this will continue to trend upwards. In terms of dividends as well, I did recently get a dividend from Microsoft, which was a little chunk of change, which was nice. But like I said, my big dividends have come from my Vanguard account, which I should get in July. And I'll track this, but you can see everything's been trading upwards. But that was just a quick update of how things are looking. I just wanted to go through Apple's. It's one of my biggest holdings, and the Nvidia stock split. But if you did have any thoughts, feel free to leave them in the comments. Cheers.